Good morning, everyone. Happy New Year. Oh my God, 2025. Can you believe that? I can't. What is going on? All right. Hope everybody had a great New Year's Eve. We're going to see what the markets are doing this morning. But before then, if you're here for the first time, welcome. This is the London session on TopstepTV. My name is Deeyana Angelo, aka Market Stalker D. I've been trading for almost 18 years now, and I've been trading futures for, well, almost 13. So yeah, we're going to see what nat gas is doing. We have another gap up of about 5%. So I don't know whether you can see that. See this? That's a gap of 5% again. So the Widowmaker doing Widowmaker things. Gotta be very careful with nat gas. But it is moving, right? So I'm gonna be focusing a little bit more on it. The great thing about natural gas is that we also have the micros. So we have the micro natural gas. So even if you're on a 50K, it's actually pretty cheap to try and get involved. I would suggest, if you've never traded natural gas, to try it just with one micro, get a feel for it, see how your levels are working. But yeah, so it's certainly a product to watch for the next couple of months at least. Because one of the reasons why this is happening with natural gas, this extra volatility, is because we've had some news from Russia, but also it's the winter time, right? So a lot of the time in the winter will increase demand both for crude oil derivatives and also natural gas, because that's what these products run on. Admiral says, platinum is in a long era. Yeah, platinum rolled, I believe. I haven't actually looked at it that closely. I'm kind of on a semi-break from the charts, so when I'm not on the stream, I'm trying to rest as much as possible to get over this really annoying cold that has hit me literally right on Christmas Day. But yeah, platinum is now in April, and I believe the roll is now finished. So we can take a look at platinum. I've got some old levels here. Let me just drag out some levels for platinum. What is that? There's J. Okay. PLJ. And let's drag it out. Let's use this one. I just want to have a look at what the options are doing. So that's what I'm looking at now. Just a little overview. Right, so we are below that 950 level even in this contract. I had some interesting levels at 910. And what are we doing on the profile? So many charts and so little time. Let's see. Platinum. Let's begin on the weekly chart, actually. That tends to give us a pretty good overview, just to see where we are. Well, I mean, it's gone below that relevant low, at least on this contract, and it's trying to go even lower. So that comment about platinum being in a long era, what are you seeing? Because I just see a patchy, day or so, but otherwise I see a downtrend there. So maybe if you could elaborate more, why would you think that it's in a long era? Unless I've just gone completely blind and I'm not looking at the right things. But yeah, for me this doesn't look long, at least not yet. I literally haven't looked at platinum for like forever. I think it was like a couple of months now. What else do I need? Just need to adjust these things for the new contract. So give me a second. All right. I mean, for now, London is opening inside value, trying to go lower. So let's go down to a 4-hour chart just to give a little bit more depth. VWAP overnight, Globex VWAP. It's not doing much. It sort of came down and then flattened. And it's still pretty flat. But we are trying to extend the price below the London value from Tuesday. Because obviously we weren't open yesterday and the day before for New Year's Eve. We are slightly further away from overnight VWAP, which you can see better on this chart. But again, we're coming into some of these lows, so I would want to see what happens there. But otherwise, I would probably be looking for maybe a pullback somewhere higher at some point today for more shorts. We have a GEX2 level at 910 when it comes to the options. A more relevant level at GEX1 at 920. We have some interest around VWAP, just like within sort of 20 ticks there, but it's not a major level, and I would say that it's in the kind of a middle of the range. So I would probably be wanting to get involved either at the highs here, maybe after a little stop run because we have another more important level up here, or see what they want to do with this area where the lows from the previous days were, and then maybe to get that responsive activity long, but that wouldn't be a big trade. It would be just like more of a scalp. So yeah, platinum to me doesn't look that interesting. No, it's just it's a bit meh. Not really what I want to see out of my setups, because anytime you're inside value, at the purple line I can see World King and Top, King N1 Top says what is purple? Purple is the overnight VWAP, so Globex VWAP. It starts to track as soon as the market's open, and then it gives you a value volume average weighted price VWAP. So yeah, we all kind of use it as a rough gauge of whether there's any movement, whether it's sloping, whether it's completely flat or not. And if it's flat, generally you don't want to see that. So right now on a 30-minute chart, it's definitely flat. So we'll see whether that changes, right? But yeah, platinum opening inside value, flat VWAP, like it's not, I want to see imbalance if I'm gonna get involved with something, and imbalance is usually much more conducive for nice trending moves. And even though I'm more of a mean reversion trader, I still, I don't want to see flattened out anything and then kind of get some weird move. I want to see a big sort of elastic band snap effect whenever I'm trying to get involved in one of my big D-style trades. And that means I have to be really selective. Otherwise, when we have open inside value, flattening VWAP, that usually means that I have to be like scalping effectively. which I'm not a huge fan of, and it is more statistically open to be a range bound day when you have these sort of conditions than any sort of a mad momentum move. And of course that can change. It's not impossible. Obviously anything can happen, but it's just statistically taken in the time of the year as well. So we have, what are we, 2nd of January? I mean, how many people are going to be actively actually trading who have very deep pockets? Are they going to be there in the office clicking buttons, or are they going to be with their families and maybe planning a trip back 2nd week of January? Something to think about. But let's have a little overview. Let's see what the equities are doing. I mean, nat gas is obviously insane. Call it MC Hammer. You can't stop this. But yeah, let's have a look at ES. So on the daily chart, ES is hitting some demands and having a little bit of a reaction. Nothing to write home about, but certainly interesting. So we have a bigger time frame volume POC around this area, exactly where this visible range is. I prefer to look at visible range as more of a fixed range. So I would use like 4 weeks for that. And you can probably do that. It's just that on my other charting platform, it's much easier. So I'm not going to be doing that here. But yeah, let's have a little overview, a little look-see into ES. And just a heads up, I've got 3 dogs in here and a couple of them are moving. So if there's a bit of kerfuffling, you know what's going on. Here we go. Let's have a look. Yeah, so we are actually knocking on the London value low in the ES. So let's drop down to the 30 minutes to again get that zoomed in view. And even if you trade NQ and other indices, ES is like on a lot of the days it would be like a benchmark. It would be pretty important for a lot of the decisions, especially the way I trade. I like to look at all of the related products and then to see exactly what is going on. Now that part is a little bit discretionary because you will always notice that maybe ES is pretty range bound, but NQ is kind of extending outside of initial balance. And people would say, well, NQ is a leader there. But I would slightly disagree with that statement unless we have like earnings and they've sort of decoupled, right? To me, it's more the fact that NQ might be a little bit crazier and, it's a very fast moving product. So naturally, it's going to overshoot levels. And until ES effectively confirms the same sentiment that we are indeed extending outside of the initial balance, I wouldn't get involved. So that's how I like to do things. ES is already extending the average daily range. Now, the average daily range was located around 15,972. And like I said, we have the value low around 59.68. So in and around this area, there are some key levels. And looking at the options, though, those key levels are higher up even more. So we could be looking at a low volume drift higher. At the very least until 59.85 maybe, which opens up a possibility for value acceptance long. What does that mean? It means that if you have ballpark value area, let's say like this, just like, ballpark, here we go. And remember, these are London-specific values. Once you get to the main cash session, everything changes because we have new references from the actual main cash session. This is the effectively out-of-hours distribution curve. So this is where it was. And effectively, if you have some options levels deeper into the area, what's more likely to happen is that statistically the value acceptance is a better play. Why? Because you have the market makers who need to adjust their inventories in and around those levels. Now we have the distribution curve, which is also very important, and we have the projected ranges, which are also very important. But those at this particular point only play to the short side. Considering we're in January and people do start to maybe buy for the new year, and we have had a pretty large sell-off, it's not beyond the realm of possibility, and in fact statistically it's more likely that we're going to see some long stepping in here. So value acceptance is deemed to be on the chart when a 30-minute time frame closes. Initially it was 2 candles, but I say it's 1 candle. This is where my method differs from Dalton's, because by the time that you wait for 2 candles to close, you've missed the whole setup. And I don't know how it was in the 80s, but these days that's not the way I like to play it. So anytime, in fact, we start to spend a little bit more time inside the value, I would deem that we are accepting value because we are unable to get out of it. And it's the same thing, same concept that I use for many other things like supply and demand zones, VWAP. Are we reclaiming it? Are we rejecting? How much time are we spending trying to do so? And for me, I would be looking for acceptance of value, and then at the very least to see what happens around 9:59.85, because that's where some calls are located. So that would be like a major level. But I don't like the fact that a lot of the gamma exposure levels are really close together. Whenever that happens, it means that we probably have a bit of a range-bound day on our hands. So it's going to be slow with a possibility of a zombie rally. Does that make sense? Lido the Legend says, Happy New Year. Let's all have the same goal in 2025. Lambos. Dude, what would I do with a Lambo? Where would the doggos go? I have 8 dogs. Where do you put 8 dogs in a Lambo? I am looking at motorhomes, though. Yeah. Thoughts on DAX for the day. I'm in a small long currently. I don't trade DAX this early. Sometimes I do, but I trade it if I'm awake. I prefer to trade it in a setup called the Frankie Fake Out, which effectively is a very specific thing where Asia sort of has a clearly established range, and then it tries to go one way and then it turns around. And typically then when London opens, you can have a bit of a continuation, at least for the first 30 minutes. There is, and then there's another setup later on around my 11 a.m., which is usually a reversal and some kind of a failed auction on most days. You can have a partial failed auction with a later bounce, but it's not that probable. I am looking at a bit of a spiky day here, so let's and I can see that there was a Frankie Fake Out actually. So you'll see one of the things that I marked on my chart. That was my trade that I did on DAX. It was a very juicy one. So yeah, here's the Frankie Fake Out straight into the average session range low. This is a session range high even. We have a whole bunch of volume on DAX and the POC from the 4-week mark. So a lot of this is literally just so stuck in a range that it naturally created a distribution curve. So what is a distribution curve? Well, it's this belly, right? You can see that. So all of this is just one big range. And seeing how we already have a failed auction of some sort, it's possible that your long will work out, but I'm a bit worried that these spikes might be setting up for a range-bound day. Not to say that you don't have space. You do have enough space. Let's see where the nearest supplies are. Because this is just one big whipsaw, right? So the nearest supply that is visible is on a 5-minute chart. You have some supplies to battle through around this POC. But if they're successful, you might be looking at 20,156 at the very least. But yeah, the spikes are bothering me. What's going on here? Right. It is possible that we go all the way back up to 20,185. But we would need some big buyers to come in here. If they don't, what might happen is that we just meander in this volume POC area for the next few hours, and then eventually it starts trickling down lower if it cannot get through that. Let me just clean this up a bit so you can maybe see that. Yeah, so that's another thing that DAX likes to do. It if it can't go over VWAP, and it loves the VWAP plays, but usually on the long side are a bit safer, it will at some point just smash away from it. Is that going to happen today with the fact that it's the 2nd of January and stuff? I don't know. Nobody knows, obviously. We have a bit of a gap on the day. So there's definitely some scope for those shorts to play out. We have exhausted both the average daily range and the average session range. So yeah, the shorts would, to me, would be more juicy, especially if we can get it a little bit higher, maybe above this volume POC. But I wouldn't be looking at longs here just yet. If you're already in a long, see what happens, manage your position correctly. If you see any weakness around overnight VWAP, that will be the sign to get out. Sometimes it likes to try to dip below VWAP and then buyers pop in. I'm not seeing that here. I'm actually seeing that we tried to reclaim it, promptly failed, and it's actually moving away. A bad sign, really bad sign for longs here would be if we start to take out this excess from whatever that is. That was D period. So if it starts to dip below the initial balance, longs are over, okay? Because then it's going to start building structure. And even if it pops back up, it's just not a good sign. If you want a failed auction to happen, you do not want another retest of excess that was left behind, because it means whoever bought before, they're not there anymore. Those are like some little clues that you can take from the profile in order to read it pretty well. So yeah, you need it to stay inside the initial balance. Effectively, if it goes below 20,037, it's no longer a long setup. Okay, so hopefully that's useful. I'm going to see how this looks because I slept in today because I'm still sick, and I had some troubles with my blood pressure last night, so I had a lovely nosebleed. And no, I was just in bed, so I wasn't really partying or anything. I wish. I wish I had a different reason for a nosebleed, but no, it's just being sick and miserable. So I'm going to try and recover before I kind of get into the active trading again. And I'm probably still going to wait until the second week of January. Usually if I wasn't doing these streams and stuff, I would be away. I would be, doing family stuff, and, I wouldn't be in front of the charts trying to trade. So I'm going to still try to have a bit of a break, even though I am working, obviously, but it's sort of partially working and not taxing myself to actively look for trades, to look for like 3 to 5 trades every single day. If I find one, great. If I don't, that's fine as well. Let's upvote DAX. So I don't know if we've got some new people here. I know that some of you reached out to me saying that you found me towards the end of the year, but we don't have DAX yet on Topstep. So let's upvote the post that I just posted in the chat. If we can get that to about 400, they might reconsider it. But for now, like I said, I've lost all hope that we're ever going to get DAX. World King One Top has a pretty good question. ES or NASDAQ more expensive to trade? Okay, so even though NASDAQ is $5 per tick, whereas ES is $12.50 per tick when we're talking about full contracts, NASDAQ is actually more expensive. Why? Because if you look at the ranges that both of them have, so this is how I create my trading models, where you look at how much we move in any single day. Now, I don't think I can do the measurement tool on this particular platform, so I'm just going to quickly do that on my other one, right? On average, NASDAQ moves 1,157 ticks, okay? So if you were to use that as your guideline of what your average maximum loss would be for the day, and I always go from the point of view of maximum loss. I never look at my risk models. Oh, how much can I make? That's trader math. That it never works. You know, it's like wishful thinking. So you need to think from the risk side first in order to create your risk models. And you can use, you know, value at risk as well for this calculation. I've made a YouTube video probably about 2 years ago about value of risk and how you might be able to use it as your intraday maximum loss, and then project the sizing down from that point. But that's probably a little bit over the head of people who are just looking for a simpler way of doing things. So this is a simpler way. This is the average range for NASDAQ. So on average, in the last 40 days, we have sort of moved about 1,000 ticks. So when we go times 5, which is what one lot is, you would need to have at least about 6 grand in order to open a trade, leave it alone. And if it goes into a trending move, that's what you will be looking at roughly. Okay, it's not a perfect measure, but it's a good starting point. Now with ES, if we look at ES and same measurement to see how much it moves on average, it moves 249 ticks. So for the same period, it only moved 249 ticks. How much is one contract, one tick on ES? Is $12.50. So in order to do the same thing, to open up a position on one lot, leave it alone, you're at risk of losing 3,112. So which one is more expensive? Well, the one that moves more. Why? Because it's more liquid, right? It's more crazy. And therefore, even though tick for tick, NASDAQ seems like it's less expensive, in order to scale your stops systematically. So let's say that you want to use a quarter of the daily range for your stop loss, okay? So that will be 249 if you divide it by 4. You know, you'll be using 62 ticks, which is roughly 15 handles, 15 full points for your stop loss, right? And, you know, 62 ticks times 1250, which is how much ES costs, it would be about 775, right? But if you try and do the same calculation on NASDAQ, which moves for one tick, one contract, over 1,000 ticks a day, so it's 5,785. If you were to use a quarter of the range there, you would need nearly 1.5K. So that's how you determine, that's at least how I like to determine what my absolute maximum stop loss should be. Obviously, if I can scale it down when the structure of the price tells me to, I will. But these are like the starting points, right? They're like the starting points to see which one is more expensive, whether it should be trading micros or not. And obviously for really for both of these, if you're on a 50K, immediately that puts you down into micros territory, right? Doing anything else, coming with a 50K account and just going, whack, I'm going to trade 5 NASDAQ contracts, that's just gambling to me. Because it means you haven't really thought about your risk model. You haven't even thought about your downside. You're just coming there with dollars in your eyes. You're like, oh, I'm a scalper. Yeah. But scalpers also have risk models. Like the best scalpers have risk models. They don't just sit there and mind-blowingly gamble. Some of the ones that you see on Instagram and YouTube, they do. They have no concept of what creating any sort of system design means, right? And that's where I criticize those types of people. They will also be the Lambo bros that you see. They're the ones who get horribly excited when they make, 20, 30K, but then at the same time, you see them lose a lot more than that. So it's like, what is going on there? Why are you losing more than you're winning? It's a risk model problem. It's nothing more than that. And using some sort of critical thinking before you sit down to trade and knowing what the size of your stop loss would be. What is your default max position? So if let's say your default max position is 5 MNQs, and then you see it moving against you, what most people will do who are a little bit new to this game, they will add another 5. So what have you just done there? You've increased your position size by 100%. Slow clap, well done. So every time I see that, I'm just like, God, no, just no. It makes me sad to see that this sort of knowledge is not out there already. So this is one of the reasons why we have TopstepTV, to try and spread the way that some of us professionals actually approach the risk models and, how to be a little bit more, savvy about your positioning. And at the end of the day, even if you don't use the same things that I use, just have some sort of a risk model. Write it down. Write it down on a post-it note. Have your post-it note. Just do basic calculations, remedial math, and try and stick to it. Let's make that one of our New Year's resolutions, right? Don't do the same thing you did last year. And on Twitter, I said, let's start blowing minds, not accounts. Okay, and this is kind of my goal with any VIP group that I'm going to be running this year. We're going to be talking about a whole bunch of stuff that is logistically connected to how to approach funded accounts. I frequently also see people taking out way too much cash. They go do or die 200 per day in their XFA, and then they're taking payouts, which is okay, but then they take half of it out, and then you've got nothing left. And they're like, oh, I blew my account after a payout. I'm not surprised. I'm really not surprised. So, things like that, where we can just manage our accounts. And, it is boring. It is literally accountancy. How much percentage, should I put away for taxes, or how much percentage should I put away for payouts? What is my overall risk level? How much drawdown do I need to have on this sort of positioning so that I can withstand, I don't know, let's say 10 or 20 days of full drawdown? Always start from a worst case scenario. So those are the kind of things that we're going to be talking about. And we'll see whether the female group happens. I'm really pushing for it, but at the moment it doesn't seem like anyone else is super interested in it. I know that most of the women who are here are, but every time I kind of talk about it, it's just, I'm like, I would like to run a female group, and it's just like whoosh, and then it sort of gets swept under the carpet. So I don't know whether they've taken that on board or not. Remains to be seen. And it's probably not going to be the first VIP group that I run anyway. So, we'll see what happens there. But, yeah. A lot of you think that us on-air personalities have, some big control over what happens at Topstep, but we really don't. It's a big company. There's a lot of us now, and if something is a good idea, you're sort of like, yeah, I'm up for it. And then suddenly, it's all announced on the main channel, and you're like, oh, we're doing that, are we? Okay. Because I found out that they're definitely going through with my VIP group next year. I mean, this is not this year. From Jay, right? We were doing a regular Thursday segment, and he goes, hey, so how does it feel to be the new VIP coach? And I was like, am I? I was like, is it? And I missed the part of the broadcast. I couldn't watch it. I was busy with some meetings. So I was like, oh, okay, that's happening now. I see. So yeah, but it's going to be interesting. I am really enjoying coaching as always. Like I've been running my own coaching service for 5 years, but that's a lot more one-to-one. That is very much tailored to each specific problem that traders might have. And they work literally super closely on their plan reviews with me one-on-one. Intraday trades that they're doing, so everything is a lot more intensive, and then we look at actual executions. We look at stop loss placements. We look at a whole bunch of stuff. So obviously the group coaching VIP is not going to be to that depth, and I'm not going to be here to drastically change the way you trade. If you want me to, we can absolutely talk about it. But if you already have a system that partially works, you don't have to throw out the baby with the bathwater. We can already work with whatever you've got, but just maybe to put things into some of the risk models that will be a little bit more robust, so that you have less variance in your results overall. CDG72 says, Dee, your knowledge in trading is on another level. Thank you so much. I really appreciate that. It's a very, very kind comment. And they also say, very much enjoy your TopstepTV sessions. Yeah, I mean, I'm a nerdy person, I'm I know I don't look like a nerd, but trust me, I am. I was a music nerd for many years. I was a session musician. And I'm one of the people that has kind of like 50-50 creative versus analytical brain. And you don't really find that very often. You either have super analytical brains by like 70 or 80% balance, or you have super creative brains. And, very few people are dead in the middle. And I'm very much like my mom there. She is like that. Very creative, but she was an accountant. So it's like, okay. And then my dad was a musician, but he started off wanting to be a chemical technician. So, that's also a bit weird. And he actually started to go to university for that. But then decided he was going to go into this mad rock star music career that he had. So I have, creativity and analytics on both sides of the family. And I suppose I picked up the same. So what you're seeing here is just me being super nosy and me wanting to know everything about everything. So naturally, my methodology is maybe slightly more evolved. I wouldn't say complex because it's still not rocket science. At the core of it, you have the distribution curves. Are we inside it? Are we outside it? And how far? So that's step one. Second, you have projected algorithmic ranges. How much do we move over the last 40 days or 10 days? Depends on what's happening. And how far away are we from those levels intraday? And then finally, you have things like time of day, so just pure timing. Is it completely crazy? And are we reaching some of our relevant levels too early or way too late or just at the right time? For example, Euro close fade is one of my ultimate favorite setups to do. And if that appears on RBOB, even NG, so anywhere where I see it, I will be like, ooh, that looks juicy. Because I know that statistically on the products that I mainly trade, that's going to happen at a rate of 77% of the time when we're looking at sample sizes of, let's say, 2 years or more. Because I've even, seen it happen so often. Like literally, if I look at my 13 years of trading futures, every couple of days, and even some periods have every day it happens, you have that fade after 9 a.m. Central, which is 3 p.m. my time over here in London. And then sometimes it doesn't happen in until the euro close, but there's always a bit of a fade, and that's literally one of the things that I really enjoy trading. Absolutely favorite. If I can find a very good level somewhere there, that only increases the setup. If I don't have a good level, I will maybe rely on the profile. The only time I wouldn't do that is maybe Thursdays, when we do have some bi-weekly option expiries on crude oil and some of my products just go into a trend. It's also a day after the inventories, so that can weigh on it as well. But yeah, just things like that. But at the core of it, it's a slightly more evolved of looking at the market in order to gain situational awareness a little bit better. Apart from that, it's still not rocket science, and it still comes down to your mental side of things, fight or flight response, whether you're doing paper cuts around one setup, because, I was talking about this last week, actually. If you are saying, well, my strategy is working in practice, why isn't it working in combines, which was the question that we had. And actually, I threw an idea out there that if you're doing paper cuts, so if you enter, then you're not sure, then you exit, then you're still not sure, but then you enter and it finally works out. You've just done like 2 paper cuts, and that's not the same strategy as the guy doing one trade on a slightly larger stop with a smaller size and letting it go. Okay, that's not the same. And this is the level of sensitivity that your intraday trades actually have, which many people don't really understand. Whenever you change anything, that drastically changes the outcome of the system. If a setup around a level calls for one try from a 15-minute time frame or a 5-minute time frame, and if you lose that, you let it go, to keep trying second and third time because you think it's going to go, that's you. That's not the system. So the sooner you realize that any little change that you do is kind of like adding yet another variable into the code that you're trying to write, and you're the machine, the better you will be off in this game. Because what's going to happen is that you're going to realize that if you size up twice and you set your rough size to be 5 micros, however, in your head you didn't say maximum default size 5 micros, and then it goes against you, you're like, I'm just going to add. And that's also adding another variable, because right now you're in with 10 micros. You're not in with 5, which you said was going to be your maximum default. And then also changing the stop loss. It's like, oh, the market is a bit bigger today, like the moves are bigger, candles are bigger. Let me increase my position size. It's like, well, that's all very well, but have you accounted the size to be lower as well? Because if you look at how NQ has been behaving, if you're effectively going, we have like, a massive over 1,000 tick move in a day, and some of the candles were like ridiculous. They were like 30 to 50 points, like absolute madness. And people are like, oh yeah, I'm still trading my 5 micros. Well, you can't, because last week you were using a 20 handle stop. So you can't be using a 50 handle stop and not account for the sizing. Like, what are we doing here? And that's the same thing. It's increasing your risk by 100%. If one time you're using 20 handles, another time you're using 40, but you're still on 5 micros, you are doubling your risk. And that's over 100% increase of risk. And then people are going, oh, it's not working. I'm not surprised. You've changed so many variables that even like you're confused, let alone somebody else is trying to make heads or tails of what you're doing. So let's try to be better with, the systematic side of positioning, stop loss size. Develop some sort of a way to calculate maybe the same risk per trade at the very least. And that will go a long way towards your consistency, right? Towards the consistency that you're always losing the same amount. And, gaining, that's another thing. That's a matter of context. Nobody knows whether you're, that's something you can't control. How long the move is going to happen, when it's going to happen, and whether your stop loss is going to be enough for it. But the thing that we can control is the stop loss size and the position, and also where we want to put our stop. Those are the things that we can control. And that's the things that we do control. Everything else up for debate. It's down to trade location, your expectation, your performance, it all comes back to that mirror reflecting back to you how you're doing via your P&L, and a lot of people don't like it, but as traders we have to be very, very brutally honest with ourselves, and that's where reflecting on your performance and how you've done, it can help you, a lot. Are you a profitable trader on a yearly, monthly basis? Okay, so in my Topstep account this year, I am down about 20 grand, okay? In my DAX account, I've absolutely smashed it. We are probably sitting on almost 7 figures there, but that's a bigger account, it's a corporate account, and it's a completely different ball game, right? It's not a combine where you're super tight, and it's an account that's been going on for nearly 10 years now. And in fact, October 2025 will be 10 years. So, completely different ball game. But yeah, we also have algorithms that we license to other companies. That's also wildly profitable. That is based on mainly 3 of our algorithms that are constantly being very, very interesting by other firms. So one of them is the average daily range thing, and the other one is the breakout on certain products. But again, the firm has to decide what time of the year that's going to be ran, because it used to be pretty good on crude oil, but since then we've actually applied it to gold, and it's been performing pretty well. And that's literally just automated trading. So I'm just a quant strategist where I decide when we're gonna switch it on or off. But when it comes to licensing it to other firms, you effectively just license the algorithm, and you pay attention that the results are there. If the results start to fail, you switch it off and you try and apply it to something else, and you try and resell it. So it's a bit of a different ball game. But we do have an entire software development department as a part of one of my companies. So it's not all just prop accounts and stuff and, YOLOing it with these small, tiny accounts. And for me, having an account for 1 year, this is the second time I've come back to Topstep. It's still a new account for me. It's still just, beginning its journey, and it's starting to do whatever it needs to do. But yeah, so crude oil, as you guys know, died on me, and crude oil was my bread and butter. They did say that they were going to have DAX, so that was one of my things that I'm like, okay, never mind, crude oil has died, but we're going to have DAX. Obviously, that didn't happen. So throughout the year, I spent going on a little bit of an exploratory mode around different alternative markets, see what works, see what doesn't. A lot of the combines, half the time I wasn't even touching the live account once I realized crude oil is not what it used to be. And that happens, right? It happened to me in 2012. You have to learn to adapt, and you have to learn what to look for. Now, I don't like trading equities as a core thing. I like trading DAX because it's in London and I know it very well. I've traded it for 7 years now. But with that ES and NQ, when I was introduced to ES and NQ, it was 2013, okay? ES was moving 16 ticks a day. And I was like, I might as well go and trade bonds then, because, at least I can size up massively and actually make some cash. Like, what is this? So I had an instant dislike for ES from the beginning. And NQ wasn't being much better either. It was pretty quiet. It was nothing like they are today. Only during COVID, I started to look at ES and NQ usually later in the day, usually after 9 a.m. Central, and certainly into power hour, when I do like to do at least one ES or an NQ trade. But if I've made my cash somewhere else on the day, let's say that I did an RBOB trade already, I'll be done. Like, I'm not going to look for another trade. Okay. If our Bob reaches my 3R, that's like 160 ticks, I'm done. Like, I've reached my tick target on the day. So I'm not going to be looking for more trades. And I've also had times where I haven't traded the live account at all. At one point it was like 3 weeks I didn't touch it at all. So, I don't consider smaller accounts to be, super important for me at this point in my life, because remember, I have been doing this for a long time. But they're nice to have, right? So I am going to try and run this one up more this year with some adjustments. And again, reflection goes for me as well. It's not just for, people who are just learning. You have to reflect. And I reflect every single month, every 3 months, every 6 months, and every year. I'm always paying attention to the times of the day that I've done well. I'm paying attention to what is actually going on in the product. And crude oil, we went from $4 a day to barely $1. So barely 100 ticks. It's so pathetic. So what was happening to me is that, and if I show you my live streams from like a couple of years ago, you would enter a trade and it would move either against you or in your favor, right? And then that would continue, and I could manage the position actively. What was happening to me, literally from February onwards, I would enter a trade, it would look like a setup, failed auction, breakout, like whatever the setup was, and then it would just die. There was nothing. So I would be sitting there going, did I lose internet? Like, what? What's going on? It would not move more than like 30 to 35 ticks. And we're talking NYMEX. We're talking the time when we're supposed to be having the most volume. And yet that just wasn't happening. And the only time it was trending, it was if there was like an overnight news from the Middle East, and then it would kick off into a trend already. And the thing is, when something is already trending in Asia, I really dislike trading it knowing that that's an out of hours move. So I could have just YOLO'd it, but being scarred with no movement, those outlier days that used to come, like they would come maybe once every month or so, it would just kick off into this big trend. And to me, that was an outlier move. So I was like, I don't know what's going on with this market. I don't know what setup to apply here, right? It's a setup that is more conducive to swings. So halfway through the year, we actually started looking at swings only on my other side of the business. And that did pretty well. So we would just be looking at CL tops and bottoms. So I will show you why. Here we go. So tops and bottoms there. And then you would just wait until the edges of the perceivable range. And it kept happening all year. If I zoom out massively, you will see that it kept happening, right? It was one big range. Range, smash range, come back into range. Come back down into the quarter of the demand, smack back up into the supply. Reverse, come back down. So it started doing that. And once we noticed that pattern, we kind of switched the algorithm to only look for the swing setups. That's worked pretty well. And we're actually probably going to have another one. I have to look at the levels again. I haven't been running it over the holidays, but we are arriving into an area that might be interesting for further shorts, because from a weekly chart, we're not yet at that supply area. And I do want it to hit the supply before we start looking at those intraday levels. So yeah, so that's the gist. It's not a huge drawdown or anything, but yeah, it's a drawdown on one of the accounts. And purely it was because I decided to only focus on crude oil, which was a terrible decision in hindsight. But, hindsight capital is always something we can look for as a learning curve. But, everyone who's traded crude oil, Coach Hoop, Hogue, everyone will tell you that this is not the crude oil that we all used to know and love. So naturally some changes had to happen, And now I am looking at RBOB, which is a twin. And since I've been doing that, I've been doing pretty well. And we're going to be looking at natural gas. But natural gas, I'm still just testing things to make sure that the setups work and just the times are similar but ever so slightly different. And I would just want to make sure that I have a little bit of data before I start trading it in the live. And that's what that's what I've been doing for the last couple of months. I like it. Most of the setups do seem to work pretty well. And I've had a couple of the XFAs that are now completely closed, but all of that is coming back into the live account. So we're well on the way to recovery. Day trading is real says, hey Dee, I'm still fairly new. Is ticks and points the same thing? No. So ticks are ticks, right? If we look at ES, really? Oh yeah, of course. It's my live account, but I should have, hold on. Yeah, I do have it. Sorry. I was thinking I did pay for it. What's going on? I do pay for equities in my live as well now, so that's it's a nice chunk of change every month just for data. So looking at how the prices behave, let's go down to a 30-minute chart because it's going to be easier to explain. So if you look at the prices here, you see 59.70. Let's put the dome in there because I can explain it better. So 59.70. Then you have 59.67, 59.68, 59.69. Those are points, aka handles. So a full handle is not the same as a tick because one handle actually has 4 ticks in it on ES. Okay, and what are ticks? Well, if you look on the dome, and I don't know whether you have level 2, but I do, so you can have a look at it on my chart. Let's make it a bit bigger. So between the full point, aka full handle of 59.69 and 59.70, you have these quarter increments. Those are ticks, okay? 0.75, evens, 0.25, 0.50, those are ticks. So those are $12.50 a pop on the main contract and the 10th of the size on a micro contract, okay? So points, aka handles, that's the same thing, but points and handles are not the same as ticks. Now, in some cases, they might be, you might be quoted in full dollars, in which case that will go by ticks, but that's a rarity. Usually you have some sort of a split that might be happening, and it will always have some sort of ticks inside it. Can we please analyze gold? Okay, yes, Theo, we can. Let's have a look at gold. Gold is hitting a bit of a screeching speed bump here. Let me just clean it up and then we'll have a look at it properly. So many scribbles. What's happening? All right, so we are developing a little bit of volume here. For now, we are just in a range. So to me, this is still a range-bound market. Right in the middle of this range, we have some supply that is pretty visible. I don't like seeing this because even if we go through this, it's going to add time onto any longs that you might want to have. And the way January works, we either establish longs or shorts for the year. Now, usually this is, again, hindsight capital. Which of those is going to be, we just need to sit and wait, see whether it kicks off into one side or the other. To me, this would be maybe some shorts. We've had such a massive run that some kind of a correction could be on the cards. I mean, look at this. It was just relentless. Since 2023, it's just so crazy. But having said that, take my whole analysis, or maybe we do for shorts, with a pinch of salt. Because what's happened before, if you analyze just pure price action. We would go up, then consolidate, then make a new high. Go up, consolidate, make a new high. Go up, consolidate, make a new high. I don't know. It's possible. But do I want to be involved here? I would like them to at least start to chip into this excess selling that was going on. So you can see this massive wick. They obviously tried so hard to get up to this supply on the weekly chart, but as soon as they took out the relevant highs from the previous 2 weeks, sellers appeared and they smacked it hard. So to me, that doesn't really give me too much of a confidence that we still have buyers around these levels. I mean, there are some buyers today because we have low volume and it's sort of half holiday. But yeah, I wouldn't be saying one or the other thing. The only thing that I can tell you for sure is that it's a range. So we have a range. And when we have a range rules apply. Try to not get involved in the middles. Try to look for trade locations to be closer to 27.50, and on the bottom side, somewhere closer to 27,600. Sorry, 2,600. Still very early. So 2,600, 27.50. That's the range. Obviously, we can try and find some intraday setups in between. And I'm going to look to see whether we have anything obvious today, keeping in mind this bigger picture. And I know that some people suffer from paralysis analysis, but this is where some of my levels can tell you how far we got to. So for example, if I go to a 30-minute chart now, I can tell you that on my other charting package, we are now hitting some important levels here, exhausting both the average daily range and session range for the London session at 26.59. So to me, this would be a chance to maybe look for some fades back down to VWAP at the very least. When it comes to the options levels, I do have 26.60 as a level. And if we are going to reach that, looking at that intraday scalp just purely from the options activity, it will be 26.55 up to 26.60. I don't like trading like that, so that's not what I look for. I want to get a very large reversal from it, so I'm very selective with what types of setups we're doing. I mean, if we're on, on lunchbox trading or back to the futures and we just want to, find some trades to have fun with, I will do a scalp, But generally, for my sanity and for my P&L, I prefer to have my trades that I'm confident in and that I know can bring me 3 to 5 R multiples over a couple of hours. So that's what I like. I think scalping is very time consuming. I think that it stops the mental capital a lot. And frankly, with me, I can only handle it for about 90 minutes. After that, I'm completely wiped. As you guys know, I'm not exactly young, even though I look it. But I'm not a kid, I am a woman in mid-40s, so the energy levels are just not what they used to be. And my mental capacity is just especially when it comes to mental capital, where I have to concentrate. When I was younger, guys, when I was starting to trade, I could happily sit here for 6 hours with full focus. But that seems to have changed. I need a lot of caffeine to be able to do that now. An hour, 90 minutes, that's fine. But anything past that, I'm just ugh, Christ. All right, let's do some plugs and then wind it down. James Scott says NQ is hard to read right now. Any thoughts? I mean, yeah, it's going to be hard to read because it's going to be half holiday. So wait it out. If you can't, if in doubt, stay out. That's, a little rhyme that you might want to apply. If you don't have a good read on it, if you don't have an understanding, good understanding of what's happening, how do you expect to make good trades out of it? Whenever I don't have a good understanding of something, I just leave it alone and move on, right? And if NQ is the only thing you trade, just walk away. There's going to be more days. Like, we have a whole new year ahead of us. Don't rush. Like, rushing is the primary way to screw up all of your accounts, okay? So learn the art of delayed gratification. Learn that you can't have everything right now, right here, this minute. And you will be so much better off in life in general, not just in trading, but in everything. I have a tattoo here in my native Serbian that says, haste makes waste, right? And what does that mean? I also have another one where I say less haste, more speed, especially when it comes to XFAs. People who rush, people who are trying to get rich yesterday, they never last, right? We see them today, we see them with their massive P&Ls, and then we see a tombstone on Topstep, and then they're gone for a long, long time if we ever see them again. Some get so scarred from the experience of blowing up that amount of cash in a single day that they never do trading ever again in life. So less haste, more speed means that if you take it slow and steady, we're always talking about trading small, building a buffer, maintaining the account, not digging a massive hole on day one or even week one and month one. That's how you stay in this game for a long time. I think I'm criticized a lot for not sizing up like a lunatic, but I will only size up if I deem that the account balance is at an appropriate level. Until such time, there's no sizing up. And I have zero ego over that. Yeah, okay, to me, a trade is a trade. And I really couldn't care less if I'm trading 1 micro or 100 minis. And I've done both, okay? I've traded, like the biggest size that I traded in gold was 180 lots. 180 lots in gold. Now, I know that this is out of hours on gold. You usually have a little bit more liquidity for the main thing. But you usually have about 40 contracts either side, which means you have to think about how you're going to execute a trade. There's no click and enter. That's not the name of the game at that point, because you're trading a market that just doesn't have that many contracts available, and you can actually move the market. So I remember the first time that I sized up that much, it actually took most of the orders that I had on one side to fill me. And it took a while. I had it set to fill or kill. And then I had to set it to something else because it just wasn't going through. And I was like, what's going on? So I asked my risk manager, I was like, it's not, like, it won't fill an order. And he was like, really? And I was like, well, yeah, man, like, what's going on? And he goes, well, you don't have enough contracts. Like, what? Do you not get that? And I was so green. This was like 2013. Didn't know anything. I came from swing trading. I had a big account. Never traded with much size, but, made enough money. And I thought to myself, hey, I'm pretty good at this. Let's go into this professionally. And that's how I found myself in a prop firm. But yeah, completely different ball game. So he goes, well, you have to look at, the liquidity pools. And I was like, well, what do you mean? And he's like, well, where is the most liquidity? Like, you can't just enter 180 lots willy-nilly. And that's where I learned to look at the dome. Because I'm like, oh, that's what that's for. I see. We all have to start somewhere, right? You see me after nearly 18 years of doing this. And yes, there's a lot of knowledge and people are like, wow, you have such big knowledge. But that didn't come overnight, right? It came through a lot of hard work and, pain, blood, sweat, and tears, as they say. But yeah, that's how I learned. So I was like, oh, I see. So I have to wait for a counterpart. And then in the end, that was so much easier because I could then see where potential liquidity is. Or I had the option to just partial it, right? Like, let's say if I wanted to fill 50 now. Well, I could fill one around these areas, so this price. Then I could fill maybe another 4 or 5 a little bit higher because we have 7 and 9 contracts here. And remember, it's all about matching orders, right? If you don't have a counterpart to take your order to the other side, it's just going to hang. And that's called slippage, right? Slippage is not some mystical thing that's like, oh my God, let's pray to the slippage gods. No, it's just liquidity in the market. Like how many people are actually involved? Can we match the orders? And then the bigger your order, the further out you are in the queue for the execution. So if you have a 1 lot, you're going to be at the top of the queue. If you have a 4 lot, you're still going to be somewhere pretty much at the top of the queue. But if you have a 100 lot, you're going to have to wait a little bit. Or you can have an algorithm that parcels the orders, right? Now, I didn't have that at the time, so I had to do it manually. And I would just literally go, okay, we have 28 contracts up top here. Maybe I can grab another 10 there. And you just keep doing that. So naturally scalping, when you're doing that, it's impossible. Like you can't scalp on 180 lots because it's not going to fill you. There's no scalping. You have to look for the bigger moves. Otherwise, all you're going to do is have so much execution cost that it's going to eat into any few ticks that you grabbed. So over time, I gravitated towards finding bigger trades that are worth my time if I'm still trading with size in order to cover the execution costs, to get a decent risk reward, and to ensure the best average price that the market can possibly provide. So all of that is something to keep in mind. But NQ, again, went off on a tangent there. But NQ, if it's hard to read, just don't read it. Move on. Muslimil says, what's your strategy? I think I already explained it. So it's got about 3 or 4 moving parts. Supply and demand, market profile, time of day, and projected ranges. That's pretty much it. So it's, I say that's pretty much it, but each of those is a moving cog. It takes a little while to understand, but once you understand it, it perfectly gives you situational fluency. So even if you get smacked in the face, you're still not going to be going, what the hell happened there? You're going to be going, oh, actually, yeah, that actually went into a sustained auction. I was looking for a failed auction. Okay. Whoever was in that DAX trade, so we've taken out we've definitely taken out that excess. So we are now below the initial balance. I'm going to see what happens after 11. So if I can find some sort of a trade on the short side, that would be nice. But I do want to see a little bit of a pullback, maybe at least until this like 20,053. If we get another buying, if we get more buyers turning up, maybe it's a scalp up to VWAP. So that would be an option. But at this point, there is no failed auction. This is now not a failed auction. It's a slow, sustained auction. All right, guys. Some plugs for you. So if you have 5,000 in payouts and you're located stateside, so it's only for the traders in the US, you can join the payout club. So you can get a hat and a badge. I'm going to post that in the chat now. There it is. And we hit 100,000 members in Discord. And now the VIP groups are going to be in Discord, and they already are. So if you haven't checked it out, if you're looking for more trading buddies, if you're looking for coaches to answer questions, they're all in there. And very soon I will be in there as well. That's your Discord. And we are also looking for traders to come on Topstep to trade with us. So this is the casting call link. Here we go. Malik is asking me, do I have kids? Only fur kids. Only fur kids. I was never really into the babies because my sister had 2 when I was very young, and it was just too much work for me. I like other people's kids, just not my own. But I have 8 dogs, which, buck for buck probably works out at about quarter of a child each. So probably have 2 children if you count 8 dogs. So yeah. Gear says I just passed 68 the other day. Yeah, you're a wise man. Yes, we know. I know. Lido says his link just took me to Andre's OnlyFans. Yeah, I think he's trying to grow it. He's gonna kill me. Yeah, so he he really doesn't like it when we mess with him, but it's all in good fun. You know, I know that he absolutely despises when we're messing with him. But yeah, I do think he's trying to develop another source of income. Taya says, Dee, you are unwell and you still managed to come online this morning. Thank you a million. Hey, I will be here. As long as I sit up, I will be here, right? If I can't sit up, if I've got fevers and stuff, obviously that's not very possible. All right, guys, thank you so much for hanging with me. This is going to be it for today. I think I'm on the main broadcast later on for Back to the Futures as well. I think I made that mistake last week where I totally forgot and I was listening to the main broadcast and they're like, we're going to have Deeyana here. And I was like, what? And I was like in bed. I was like so messed up hair, like no makeup, just looking like I'm about to scare some children. But yeah, luckily I heard the announcement on time. I don't know why I thought I wasn't on. It was just so weird. Probably just the sickness playing tricks on me. But yeah, click the like button, click subscribe if you got any sort of value out of this. I will probably see you later on today and then obviously again next week as usual, Monday to Thursday. Until then, enjoy the main broadcast and I will see you a little bit later on. Let's smash 2025. I'm Deeyana Angelo, and this has been TopstepTV, the London session. Take care.